Go interactive with X-Ray, where we bring trading experts to you live in the platform. Choose sessions, watch live market analysis, and catch up on your favorite market insights anytime. Ask questions and go one-to-one with leading experts on gold, oil, FX, crypto, indices, and equities. X-Ray, your very own analysis team, right at your fingertips. That's higher trading from MarketsX. Discover how some of the top executives are trading their own companies with our Insider Trades tool. See who's been buying or selling stock and what their trades say about insider sentiment. Use this unique big data tool to make more informed stock trades. That's higher trading from MarketsX.
What's happening, guys? Good afternoon, Europe. Good morning, America, and welcome everyone to the Markets Pulse. We're exactly 30 minutes ahead of the US markets open, and today we will analyze the markets with my very special guest. But before that, for the ones of you that don't know me yet, my name is Andrew, and for the last 10 years, I've worked in many retail and institutional forex brokerages in Europe. Learn what most forex brokers don't want you to know by watching our daily broadcast. And if you like what you see, guys, like, share, subscribe, and support us in delivering more great content. Here are the hottest news pre-market open today, Thursday, 25th of February, 2021. UK is eager to start talks with the US on removing tariffs. Tesla halts production of Model 3 in California, sending its share price even lower. GameStop and AMC Entertainment spiked again in another round of dodgy trading. Johnson & Johnson is waiting for the green light from the FDA with a single-dose COVID vaccine that, following FDA staff reports, does not have any safety concerns. And the last but not the least, guys, is technical analysis still efficient in 2021? Stay tuned for an incendiary round of market talks. Coming up. Right, ladies, gentlemen, traders, we're back with my very special guest for today, guys. Neil Wilson from the heart of London. How are you, Neil?
Hi, yeah, I'm very well, thank you. How are you, Andrew?
Always good, always good. How are you doing this beautiful Thursday? It's sunny in UK, isn't it?
It's not too bad. Yeah, it's not looking too bad near to the weekend, and yeah, the markets have been as interesting as ever this week. So it's been an interesting few days in the markets.
That would have been my next question. How did the markets perform this week from your point of view, Neil? I found it very awkward.
Yeah, well, I think, that Tuesday rebound was really something else. We saw the NASDAQ down, and the NASDAQ 100 down over 3%. It closed only sort of 0.5% lower. And then yesterday we got a rebound again with a fresh record on the Dow and the NASDAQ composite up 1%. So yeah, good solid bounce back, really turnaround Tuesday. The market so far, I wouldn't say shrugging off higher bond yields as such, but what it is it's able to sort of rotate its way out of it and still move higher despite the rotation that's going on, and the sort of, obviously the higher bond yields go, the more it favors companies that make money now, like cyclicals, versus companies that promise to make money in the future, like growth stocks. And it's been growth stocks that have underpinned the market. So, but it's the case that the market still wants to go higher. And at the moment, these yields, although it's been a big sharp move, we're still not on an absolute basis really at levels that would really worry. I think once you get above 1.5% on the 10-year, people start to get a bit concerned. And you could be looking at 3% on the 10-year within a year. So it's gonna get more interesting, I think.
I didn't trade at all this week, at all. I didn't know where to go, because Monday, it's Monday. You want to see if the market settle. Then Tuesday and Wednesday, we had Jerome Powell testifying. So I was like, hold on a minute. I don't want to get stopped out or worse. So I didn't trade at all this week. Now, I have 4 topics and a question to talk about today, and we only have like 20 minutes before the US markets open. Are you ready?
I'm ready. Go for it.
All right. Now, 2 of them are related to your article in Investors Chronicle, so I'm sure you're going to be familiar with the topic. The first one, yeah, and the one that did not surprise me at all was this. Tesla temporary halts production at Model 3 line in California. How does this look for Elon Musk, Neil? There's the news. You can see it on the screen, reported by Bloomberg, investing.com, and many, many other sources. Let's have a quick look at the article because it's very short. Okay, so basically, Tesla has told workers it will temporarily halt some production at its car assembly plant in California. Citing a person familiar with the matter, Bloomberg reported. Yeah, workers on a Model 3 production line in Fremont were told their line would be down from February 22nd until March 7th, yeah, according to a report. The report did not clarify the reason for the halt, and Tesla could not be immediately reached for comment. Okay, there was a lot of unclarity how much volume or revenue Tesla would lose due to the production halt. The Fremont plant has an annual production capacity of 500,000 Model 3S, and Model Y combined. Now, how does this look for Elon Musk, Neil?
Well, I mean, it's obviously it's not ideal, but I don't think that in terms of the share price of Tesla, people are worried about month-to-month production figures anymore, in the sense that the valuations that we're looking at on Tesla are so detached from those month-to-month unit deliveries and revenues that really, I think that something that's sort of short-term like this is not going to be a massive problem for the stock. I think the stock's got bigger problems than this. But it does, it underlines simply the fact that Tesla's probably overvalued. It's still, that maybe the sales might not be coming through as much as the valuations imply. So you got to sort of see it in the context of where Tesla stock has traded, and remember that it's down sort of 20% from its highs since that Bitcoin investment was announced.
Right. Let's have a quick look at Tesla. There we go. Yeah, this is Tesla. Let's look at it on a monthly chart. No, now it's pulling back from its highs. If we look at it on a monthly chart, it's currently trading at 742. I personally expect a negative opening for Tesla today following the news, and we can see the 20 MA in this case at 368.88. Yeah, which is 50% basically down from where the price is now. But let's not forget something. Tesla had a lot of issues along the years. We had a lot of recalls. We had a lot of production issues. What else? We had accidents. Okay, and all this contributed heavily. Now, the next question is, do you think the stunt Elon Musk pulled with Bitcoin will cost Tesla dearly?
Well, I think it already has. I mean, there's a sense that maybe you'll see other companies go down the route that Tesla's gone, and it's sort of blazing a trail. But I think a lot of investors are going to be worried by this, and I think particularly the sort of institutional funds, they're going to be a bit concerned about this, as I think I said a couple of weeks ago. And I think the problem now is that any sort of pullback in Bitcoin, and we know how volatile Bitcoin can be, is going to be associated with a pullback for Tesla shares. I think the problem that Tesla's done is it's sort of tied itself to, it shackled itself almost to Bitcoin to a degree, and that's maybe a bit unfair because it's not necessarily that its fortunes are tied to Bitcoin in that sense, but because of this big investment, because it's a big chunk of its balance sheet, it's more money than it makes in sales, and it's equivalent to the amount of regulatory credits it got last year from taxpayers. So it's a fair chunk of money. It's not everything, but it is a fair chunk of money. So I think the problem now for Tesla is that people will trade it to a degree on as a sort of proxy for Bitcoin, and that's going to be a problem, I think, because I think Bitcoin's going to remain super volatile.
I love what you said. I would love to ask Elon Musk directly, what is the plan with Tesla, man? What are you thinking? Because we're talking about going on Mars. We're talking about getting a chip into our brains. We're talking about cryptocurrencies. But Tesla, which is the only tangible, in this equation, is missing out. It's being forgotten. Anyway, I wouldn't be, as a Tesla investor, I would not be happy now that Tesla got connected with Bitcoin. Okay, congrats on the company for making 1 billion profit, but I don't know. I might be seeing it weird. Now, the second topic. Let's move on to happier things. I don't want to get a lot of hate. The second hot topic I want to talk to you about is GameStop and AMC Entertainment spiking again in another round of dodgy trading. What was let's have a quick look at the charts first of all. There we go. We're looking at, this is GameStop. Okay, it's currently trading at $91, and a few days ago was trading as low as 40, 42, somewhere there. Okay, we see another spike. The Reddit crowd pushing again. What's happening? And let's have a look at AMC as well. There we go. AMC Entertainment. Boom, a very, very similar chart with GameStop. What's going on? What was the connection with the ice cream, Neil? Can you tell us more? Because I read your article and I didn't get something about the ice cream.
So obviously last night the GameStop shares went up. It was in the last sort of hour and a half of trade. They doubled. So it's a very, very swift move. It hadn't been really doing anything all day. We had that announcement before the start of the session that the CFO would be ousted. Now that's sort of all part of the kind of regeneration turnaround plan that investors are calling for. That Ryan Cohen, the founder of Chewy.com, who's the sort of activist investor behind a potential turnaround at GameStop, he tweeted at about 7 o'clock UK time, so sort of 2 p.m. on the East Coast in America, just simply a picture of McDonald's ice cream, and didn't say anything else. Now, I think there was some sort of sense that maybe he's sort of suggesting, look, I'm going to turn GameStop around the way McDonald's has turned its ice cream machines around.
But
it's a bit far-fetched, but we've seen much more extreme sort of strangeness in the Reddit trade, and some really aggressive sort of call options that were accelerating the move, but didn't spark it. It wasn't a short squeeze, I don't think. The numbers short stocks out on loan to shorts are down massively since that squeeze at the end of January. So I think you're dealing with the Reddit crowd, you're dealing with Wall Street bets. I wouldn't see why that ice cream tweet couldn't have been something that maybe sparked a bid that came through. And the interesting thing was that all the bids coming through were all tiny one fractional shares. We weren't talking like institutions buying up chunks. It wasn't like that. It was retail traders that were doing it, and I think we're back to degree of where we were before, and so it's going to be interesting to see where it opens today. I think it's called to open up another 50% higher in pre-market trade, so it could be set for further gains. Remember, Roaring Kitty Keith Gill, he had actually upped his stake since that congressional hearing. He's actually bought in more, so there's people are sort of eager to get on this one again, I think.
So basically, we're looking at potentially another trial, but not as vocal as the first one, right? Because they probably got in a bit of trouble with the regulators.
Well, I think, I mean, you'll definitely see the sort of retail crowd there from Reddit getting on board this one. What you don't have though this time are the conditions for a short squeeze in the same way.
Yes.
That was a freak kind of situation. So, but you can see, investors simply bidding it up, and if people aren't going to be selling into this, then it could go a lot higher. And if you get this call options situation where the dealers need to buy the underlying shares in order to hedge their positions, they're neutral. The dealers don't want anything than being other than neutral. They're not taking a position in the market. So if you get a lot of buying of these options, and as it approached the strike price, the dealer has to buy the underlying in order to hedge their position, and that just forces it up even further. So I think you could see that dealer gamma squeeze happening again.
Right. Let's see what Robin Hood will have to say when the volumes pick up, because probably till now we didn't have a lot of volume. But let's see what's going to happen from now on. Now, let's move on. I don't want to get stuck on GameStop the entire day. Now, the third hot news came from the UK, and I'm sure you know about it by now. UK is eager to start talks with US on removing tariffs. That's very, very good news and very, very important. There is the news there. It came out 11 minutes ago. Okay, again, a short article. Let's see what the article has to say. So basically, the British Trade Minister, Liz Truss, said this morning she would urgently seek a meeting with the U.S. Trade Representative nominee, Catherine Tai, to discuss the removal of tariffs. Okay, Britain wants the United States to remove tariffs on exports like Scotch whiskey, which were imposed during its membership of the European Union as part of a long-running dispute over aircraft subsidies. Do you still remember the scandal, Boeing Airbus, with the aircraft subsidies?
Yeah, I think that was a WTO case that went on for about 10 years, I believe. So it's finally been resolved.
It started, it's way back. Right. Now, considering UK is not part of the European Union anymore, they want to negotiate, which is fair. It makes sense. The question is, how will this help UK if the tariffs are lifted near? Where will we see the pound ending up?
Well, yeah, I mean, I think it's positive. It'd be positive for the pound if you can get rid of some of these tariffs. You know, some of these exports are quite chunky sort of values. It'd be very, it'd be a positive for certain, for the certain industries, and I think it would boost sentiment towards the pound, and that would be a key thing, because really it would signal that maybe there's a trade deal with the US could become closer. A comprehensive free trade arrangement with the US. I mean, that would be looking a bit better. You'd also think that maybe there's a sense that a sort of trade war detente is sort of underway, a thawing in relations more generally beyond the UK and the US, sort of between the US and Europe, between the US and other countries, and that sort of trade war under Trump, which actually was very, very dollar positive. It cemented the sort of bid in the dollar. You could see that play out to the advantage of other currencies, and I think it would underpin further dollar weakness, which is my sort of base case for 2021.
True. Now, looking at the pound on a monthly chart, here we have support resistance levels, we have the moving averages and so on. The pound is currently trading at 141.44. Yeah, the cable. Now, it's very close to test the 200 moving average. Well, very close on a monthly chart. On an hourly chart is miles away. It's very close to test that 200 MA to the upside at 148.77. Okay, and if it's going to test that, then probably it's going to push higher. But higher from this scenario, we're looking at 169, 170. Is that plausible? Is that possible?
I would think not this year, but it's possible over the next sort of maybe 3 to 4 years. You need to see the UK sort of recovery take shape. You want to get more kind of clarity on how Brexit has affected the economy, sort of more clarity around what financial services industry looks like sort of 3 years after the trade deal with the EU. If the City of London really has sort of lost its crown, then that would be a very negative thing for sterling. I think a lot of the pound strength is really tied to the health and the sort of prospects of the City of London, just because of the amount of capital it generates, but also it attracts capital inflows, just partly because it's financial services and partly because it attracts inflows into the property market, because you have tens of thousands of people, bankers, well-off people who are buying property in London, and that helps sort of keep capital flows going into the UK, and that's positive for the pound. So I think if London in 3 years' time is a sort of financial services backwaters, it becomes sort of like Paris, then maybe it's not so good for the pound. But if it's sort of where it is now and where it has been, then I think the pound should be firmer.
You couldn't help yourself not pointing to France. No. Now, one more look. Yeah, so 140, 145 right now. 148.75 is where the 200 MA is. How realistic is that to be hit, and when roughly? Because we have a very big support level there.
Yeah, I mean, I'd be looking at that 140. What is it? 145. The high from 2018, I think, if I recall correctly, when Theresa May was Prime Minister, and we were really talking up the prospect of the soft Brexit deal, that the UK was going to stay in the customs union, that it was going to stay in the single market even. That's the level that you'd be looking at, I think, this year, or not this year, even this half. And then to kick on maybe to 150 by the end of the year. But a lot depends simply on the sort of pace of the economic recovery here. And hopefully things are looking good on that front. But it does depend on the vaccine rollout, the extent to which the economy can bounce back in the second half of the year.
Now, that would have been my next question, Neil. Will a strong pound help UK's economic recovery or not? Because the exports and the imports will be affected heavily. And not being part of the European bloc right now, okay, you're going to have to import more.
Yeah, I mean, the good thing is, you got a stronger pound, then hopefully goods that you're importing are a bit cheaper. So that means that it's not the same sort of headwind to consumer price growth that you might get, spending growth. So you'd want, that it could be a positive. Obviously, it would help harm the export market. It would make our exports a bit more expensive at a time when we're finding it difficult to export into Europe, say, or not as easy as it was before Brexit. So yeah, but I think a stronger pound on the whole. I think a strong pound equals strong UK. So that's the sort of it's as simple as that. The UK economy, when we have a strong pound, the UK is doing well, and we import more than we export. So strong pound makes sense.
You're tempting me to come back, but I don't know if they will have me now because I'm a European. Now, let's talk about the best news that came out today. Johnson & Johnson is waiting for the green light from the FDA with a single dose of COVID vaccine. That, following FDA staff reports, does not have any safety concerns. This was the best news, basically, that I saw today so far. Okay, let's have a look at your article. Let me know if you know your writing. So, vaccine progress is underpinning strength in cyclical names, with the Johnson & Johnson COVID jab set to get the green light in the US after the FDA staff report said there are no safety concerns with a single-dose vaccine. Energy and financials are at the top of the stocks 600 in Europe, and bonds, tech, and growth all remain more problematic as yields go higher. Okay, so that is the best news today, one of the biggest news. Do we have an estimate, roughly, when is it going to get into the pharmacies, Neil?
Well, I don't know that detail, but I do know that the FDA advisory committee will be meeting, I think, tomorrow to sort of to discuss whether or not to approve it. And you assume that they will, because the staff report, so the FDA staff report, has found no safety problems. And they found that it's a single dose jab. It can be stored at normal temperature, or normal fridge temperatures. And it, although not quite as effective against preventing the actual virus the actual virus happening in bodies, than say Pfizer or Moderna. What it does do is it's apparently 100% effective against deaths and hospitalizations. So that's the key thing really here. That's really what the what the authorities, what everyone wants really. It's not really cases are irrelevant. It's hospitalizations that matter, and deaths obviously. That's what puts the strain on resource. That's why we've locked down. It's not because of cases. It's because of the serious cases. And so that's the key thing. So you get that rolled out quickly in the US. There's going to be a big game for the US. I think that'll be a big positive for them, and it just sort of would probably underline and underscore just the trouble that the EU's had and still having in getting its house in order with regards to vaccines.
Yeah, Europe is a bit behind, but it's one dose versus two. Normal storing temperature It's very different than Pfizer, than Moderna, than the top ones that came out. Would you, if you have to choose Pfizer, yeah, Moderna, or this one, what would you choose?
For myself,
Yeah, would you go for Johnson and Johnson?
I would go for probably, yeah, the single dose makes sense to me. I mean, as long as it's safe. But it's they all seem safe. They all seem, the trial. They've done a lot of. They now actually have a lot of real world evidence from particularly Israel and the UK now, and really the levels of safety seem pretty high. So I think it's a win-win, really.
All right, I'd still go with Pfizer for some reason. Now, the question of the day, Neil, because I have a question as well. Is technical analysis still effective in 2021? Because I told you this week I didn't want to trade at all.
Well, it's not effective if you're looking at GameStop, but or AMC. But I think, yeah, of course it is. Yeah, I mean, it's still as relevant as it ever was. I mean, if anything, you could argue that with the algos, the way the algos trade, that there's an added sort of credibility behind technical analysis, because the algos are looking at these sort of technical indicators and levels in a way that I think sort of exaggerates the importance maybe of particular levels or areas of support and resistance that maybe are, in the old days maybe might not have held as well. So I think algo trading has probably makes technical analysis just as or even more relevant than ever.
Right. What would you say are the most helpful technical indicators, Neil, as the chief market analyst? What do you use? The things you can share with us, of course, because I'm sure you have your secrets like any chef.
No. I mean, I like.
Hold on, I'm losing you there for some. I can't hear you for some reason.
There we go. How's that?
Okay. Yep. Now it's good.
I mean, I like kind of simple, and MACD is a favorite. I always think that when you get that sort of bullish or bearish crossover on the MACD, it's always a very good indicator, particularly on a daily chart. MACD is good. RSIs, I keep that one in the background usually. Moving averages always quite helpful for sort of support resistance type levels.
Simple or exponential?
Sorry?
Simple MA or exponential MA?
Yeah, both. I mean, simple. I mean, depends, I guess, on the market and the charting, the package that you have. I think to a degree, because sometimes the price that you get might not be reflective of the cash market open and close and particular indices and so on. So you have to be careful of that one. I think, for example, on our platform, that the cash equity markets that we have are continually priced from futures, and therefore you don't get the same kind of read that you would say if you go into your Reuters feed and get the cash open and close at moving averages. So you have to be a little bit careful of that one. But on the whole, these things are sort of ranges anyway. You never get a precise point, do you? It's never down to the tick. It's always down to a nice little sort of band, maybe not quite a narrow band, but an area of support and resistance rather than a hard and fast line.
Yeah, but it helps you with calculating your entry so you don't get a big drawdown. What time frames tend to work better for these indicators, Neil? Do they really work on a 15-minute chart, on a 5-minute chart?
I prefer them for and day hours and days, really. 10 a weeks, months. The sort of longer time frame that you go out, the more valid it is, the more statistically valid. I don't think that on a 5-minute chart it matters what the 205-minute, whatever that is in real terms. But I don't think that particularly matters. Just but then again, as I say, with the algo trading, it seems that there's still a degree of testing a level coming off, So I think it depends on the market, I guess.
All right, but the higher the time frame, the more accurate it tends to be, right?
That's my feeling, yeah.
All right. Is the Fibonacci retracement useful, Neil? Because I got a bit of hate. I was talking about the Fibonacci retracement. I was showing it on the chart, and I got a couple of nasty emails, let's say, saying it doesn't work. Does the Fibonacci retracement work?
Well, I don't think anything ever works on its own with it's not like it's going to give you the magic key to lots of profit. I mean, it's just a tool. It's a tool to all these indicators they help paint a picture, and they help you visualize levels of areas where there's congestion of supply and demand, and that's what we're looking for, really. And Fibonacci levels, I think, work pretty well at times. I mean, you can see when a market is trading these levels. I mean, I think a dollar yen being one in particular, for some reason in my head, that one that works well with Fibonacci levels. You've seen that with the gold market recently, touching on 1763, that area, which was the November 30th low. That's the 50% retracement, bang on. It touched it in November. It's touched it the other day. It's held twice, but that's a 50% retracement, and you could argue, well, 50% is not. That's just half. It's not 61% or 38%, but it's still Fibonacci level, and these levels are important.
Right, and it still helps having the Fibonacci on the chart than having a blank chart. All right. Do you prefer technical or fundamental?
I'm kind of more of a fundamental macro kind of person, I guess. But I do use technicals to sort of help visualize what's going on.
I'm the geek. I love my technical. I don't even watch the news sometimes, and I just go by technical, and guess what? It happens. So that's why I fell in love with technical. So bottom line, is technical analysis effective in 2021?
It's a bit like anything. It's effective in the right hands and done well. And you should never rely on one indicator to tell you what's going to happen. I think having at least two indicators, working in tandem, that's generally the starting point, really. You don't want to just be looking at the RSI and think, oh, well, it's oversold. It means there's going to be a pickup. That's just not really how it works.
Yeah, I'm telling all the people I talk to, all my students, all my traders, and everyone that asks me, you need at least 3 confirmations before you open a trade, at least. And if you can get the 4th one, like a trading signal or something, then by all means do it. And that's the only way you're going to increase the chances of being accurate. Fair enough?
Yeah, absolutely. I mean, bare minimum 2 confirmations of the initial signal, I guess. But yeah, 3 is ideal.
You know what I used to do every time before I was opening a trade in the past years, Neil?
Pray. Yeah.
Exactly. Just before I clicked the buy or the this. Right. Now, I'm not saying it doesn't have to do or it has something to do with it, but it helps me internally. Right. Neil, thank you ever so much for being with us today. Once again, kudos for the article. I found this one the best article of the week.
Thank you.
Seriously, it was amazing. And it spoke about the what hurts me the most. Right. Thank you for being with us today, Neil. I'll have to leave you now because we're already 5 minutes into the US market session and people are waiting to see what's happening. Have a good one. I'll see you on Monday. Have a nice weekend.
Yeah, cheers.
Right, Neil Wilson with us, guys. Stay tuned. We're coming back live in exactly 30 seconds with the charts of the day, the signals of the day, and some more stocks, guys, for the stock traders. Stay tuned.
Keep your finger on the market pulse with the News Alerts tool. Stay up to date on the latest sentiment across all the major asset classes. Uncover bullish or bearish signals tied to specific assets that could be developing before major price moves, and track how news sentiment correlated with price in the past. Track the news volume on an asset, its fear index, and get a better feel for its underlying strength. All with News Alerts, your central hub for market information. That's higher trading from MarketsX.
Right. Good morning, America. Good afternoon, Europe, and welcome everyone to our live stream. How are you guys doing? Let me know how you're doing in the comments box below. Let me know if you're struggling with anything. Just let me know. Yeah, in general, just let me know. Interact with me. Don't be strangers. Now, if you like what you see, guys, remember to like, share, subscribe, and help us in delivering more great content. If you don't like what you see, still share as much as possible. I know your enemies, I know your neighbors. Now, let's get down to business, guys, and see what's happening in the markets today on this beautiful Thursday, 25th of February, 2021. Busy economic calendar with 10 announcements coming from the US, and they all weigh heavily on the direction of the US dollar, guys. In other news, initial jobless claims in the US came out better than consensus had predicted, first time in 3 months. There is a sign of positivity in the US after many months of suffering. The US dollar continues the downtrend, though, as Jerome Powell stated yesterday, the easy policy that the banks are applying will stay for some time, in hope for an economic recovery. US stocks are under pressure once again today, as mixed opening is the most probable direction for the stock markets. Crude oil rallied again, but the news that OPEC and Russia might open the pipes next week keeps investors cautious. And Bitcoin, guys, everyone's favorite, hovered between 50 and 51,000 for the last 2 days, currently trading somewhere around $51,300. US markets open, coming up. Right, and we're back with the economic calendar, guys, which got really busy after lunchtime today. We started the day nice and early, just with a couple of announcements in the Eurozone. We had a press conference from the Eurozone at 12:45 GMT plus 2, and in the afternoon, guys, 3:30 GMT plus 2 onwards, we're going to see the 10 announcements coming from the US. We had the core durable goods orders coming out positive 1.4%, which is double than what consensus had predicted, and 3.4%, which is again triple almost than what consensus had predicted. We're going to have an FOMC member holding a press conference. We have the gross domestic product quarterly and the price index. For the gross domestic product, we had the initial jobless claims coming out at 730,000 versus an expectation of 838,000. Yeah, about 100,000 or more lower than what consensus was predicting. In 19 minutes from now, guys, we're going to have the pending home sales, followed by a press conference in the same time from the European Central Bank, and then followed by 3 members of FOMC speaking until 2200 hours GMT plus 2 this evening. And then this is it. We're going to have a couple of announcements from the Kiwi dollar just before midnight, but this is it for the day. 10 big announcements, guys, coming from the US. Now, let's have a quick look at top 5 things to know in the markets today, guys, and then I'm going to rush to the charts of the day and the signals of the day, as we are already 10 minutes into the US trading session. Number 1 on the board, Jerome Powell restarts the risk rally. The global risk rally resumed overnight after Federal Reserve Chairman Jay Powell stuck to his guns, repeating in Congress that there can be no question of tightening policy in the foreseeable future. The dollar index, which tracks the greenback against half a dozen advanced economy currencies, fell 0.5% to a 7-week low of 89.70. It fell below the $90 mark. Number 2 on the board, guys, it's talking about the jobless claims and the gross domestic product, which we saw a minute ago. They came out positive about an hour ago, about an hour or so, 40 minutes. Right, number 3 on the board, U.S. tech stocks under pressure again as bonds sell off. U.S. stock markets are indicated to open mixed again as the sell-off in bonds resumes, weighing on long-duration bets in the tech sector. By 6:30 a.m. Eastern Time, Dow Jones futures were up 10 points, unchanged from late yesterday. The S&P 500, though, was down 0.3%, and the Nasdaq futures were again clearly underperforming with a drop of almost 1%, guys. 2 conspicuous gainers were GameStop and AMC Entertainment, both of which showed signs of renewed gamma squeeze and option traders yesterday on Wednesday. GameStop stock was up 56% in pre-market, while AMC stock was up 17%. Funny. People tend to forget, guys. People tend to forget, and it's only been like a week or so. Right, number 4 on the board, Airbnb, DoorDash to present first earnings. Another busy day for earnings, especially in Europe, where not everyone managed to match Anglo-American stellar numbers. Now, Airbnb and DoorDash will be in the spotlight after the close as they report their first quarterly figures as public companies, while the recent cold snap in Texas will add a bit of spice to updates from AES and American Electric Power before the bell. Salesforce, Autodesk, Workday, Monster Beverage, and HP all report after the close. And the last but not the least, guys, number 5 on the board, oil off highs as looming OPEC Plus meeting sparks caution. Crude oil prices hit their highest level since early January 2020, before the pandemic had even intruded in the world's consciousness. I got it right. Riding a wave of renewed dollar weakness. However, they retraced later, amid growing caution that the recent surge in prices will lead OPEC and Russia to open the taps again when they meet next week. The OPEC Plus meeting to set output quotas for April is scheduled for March 4. Okay, U.S. crude was up 0.1%, trading around 63.30 pre-market opening, and Brent crude was up 0.2% at around 66.30. Now, let's have a quick look at the charts of the day, guys. I cannot help myself not to have a look at the charts of the day after the U.S. markets open today. There we go. We saw negative market open on oil, 63.05 for crude oil WTI, with the RSI stochastic pointing downwards. We saw a retest of that 50 MA a minute ago. Let's see what's going to happen. We might see a bigger correction as we are a few days ahead of the OPEC Plus meeting. Now, the euro performed tremendously well today, guys. What an amazing rally for the euro, 122.37 this afternoon. Check this out. Check this amazing rally that the euro had during the European trading session. We had a tiny correction, and then it pushed up again with a green engulfing candlestick, pushing the price all the way up to 122.37. RSI stochastic are a bit off the charts in the overbought levels, guys, but there is potential to the upside for the euro. Let's have a quick look on a 4-hour chart and see what is under the scope here. Right, okay, this level. Okay, bear with me for a second. This is the level that traders are probably targeting right now as their first take profit targets on the long run. Yeah, for the long term. 122.39 right now, 123.50 or 123.40, somewhere there is where the previous high is. And I was telling you about the Fibonacci tool a few minutes ago, guys. I was talking to Neil Wilson about it. So I just want to show you real quick how this works and what it is. There we go. Yeah, this is the Fibonacci tool, which basically measures the retracement, of the asset, okay, or the correction of the asset. So you can see, you're measuring from the highest point to the lowest point. Yeah, the lowest point will always be in the red. And as the price goes up slowly, it will get into the green and then into the blue. And then hopefully we're going to see a 100% correction. Yeah, this is what this tool is measuring. Okay, you have the percentages in the left-hand side, the 23%, 38, 50, 61, 78, and 100%. Okay, and this tool helps you a lot with support resistance levels and calculating your entries or exits. Okay, this is more or less how the Fibonacci tool works. You can use it, okay, for the retracement, for the sell position, and for the buy position as well. Right. Moving on. If you want to know more, please feel free to get in touch with me and I'll do my best to help. Now, we're looking at the cable, guys, the pound, which is doing tremendously well. Once again, 141.78 for the pound. Positive push after the U.S. Open. Looking at the indicators, we see RSI stochastic pointing upwards, both of them. So the European currencies, guys, are kind of strengthening versus the U.S. dollar. We're going to see a weak dollar for some time now. 106.10 for USD JPY this afternoon, with the RSI stochastic turning around and pointing to a potential correction. We saw this. This is the 100% correction I was telling you about, guys. Let's get the Fibonacci tool once again. Yeah, you measure the highs, you measure the lows. Okay, and you can see that the price in the right-hand side went all the way up to where it was before. There we go. Look towards the left. Boom. There we go. Yeah, so this is a 100% correction measured by the Fibonacci retracement tool. Okay, it's a very, very nice tool to have if you want to calculate your entries and exits a bit better. Right, moving on to the Aussie dollar. Crikey, mate, 0.7983 for the Aussie dollar. It did well. It did well. It didn't take a beating. It performed well, just like the euro and the pound and gold as well. We're going to get to gold in a minute. RSI stochastic a bit undecided. RSI is still pointing upwards, indicating a strong uptrend. Stochastic is pointing downwards as we speak, somewhere in the 50% area. There might be a bit of divergence there between indicators. So let's wait for the markets to settle. On the other hand, the USD CAD in a downtrend like forever, guys. Since I remember, USD CAD was in a downtrend. Let me put it like that. 124.85 for the USD CAD. It is crawling in its knees somewhere there, trying to retest that 20 MA, or why not even that 50 MA to the upside. But as things stand right now, we see both indicators crawling into the oversold levels. So there is more potential to the downside for the USD CAD than to the upside. As I was saying, this is how I remember USD CAD. It's either ranging very big swings or it's in a downtrend. Right, let's have a quick look at the S&P 500, which opened to the downside today, but it is getting stronger as we speak, guys. Let me decrease the time frame. There we go. Okay, yeah, we saw an opening. Nothing really big happened. We're waiting for a bit of a push. Let's look at the Dow Jones Industrial Average. Negative opening for the Dow, tends to push downwards this afternoon with the RSI stochastic turning around from the overbought levels. We see Apple opening to the upside, even though the price is kind of subdued by this death cross and by the 200 and the 50 MA. We see Amazon opening to the upside. We see Nvidia opening to the downside, guys. Check this out. Okay, very low opening for Nvidia. We're looking at the US dollar index currently trading at 89.72, so it is in a clear downtrend. Okay, we're going to see it pushing even lower with the RSI stochastic crawling and holding on to the charts for dear life. Now, gold is doing well and not so well again. 1,784.75 for gold. We see a bit of a push for gold a few minutes into the US trading session right now. Let's see. What's a bit worrying is that the price is way below the 50 and the 200 MA, which usually implies a downtrend. But hey, it's almost impossible to see gold and the US dollar going down in the same time, you would say. Now, quick look at Brent oil futures or the European oil, $65.88. We see a turnaround. We see a correction, a retest of that 50 MA to the downside towards the 65.52. And don't be surprised if you're going to see it testing the 200 MA to the downside at 63.84. Okay, RSI stochastic, both pointing downwards. There's no sign of strength on crude oil or Brent oil this afternoon. Silver futures, okay, again trading sideways, but the price is well supported by the 200 moving average. And if you look carefully, you're going to see it is some sort of an uptrend, even though it's very, very weak. Yeah, the market is creating higher highs and higher lows, and it's trying to move upwards in a way. Yeah, if it's not gonna pick up sooner, I'm afraid we're gonna catch Christmas or Easter maybe until we're gonna see a breakout of sorts. Right, Tesla, what used to be my favorite. Right, negative opening for Tesla. We see a bit of buying power, but RSI stochastic both pointing downwards. Okay, and when the RSI, guys, is turning around from the 50% mark, what does that mean, my dear traders? It means a lot of selling power on the market, and it means a downtrend, okay? So, as things stand right now, we might see a big sell-off for Tesla. We see a death cross that was formed up there by the 50 and the 200 moving average. Yeah, if you look carefully at the charts. And if we were to look at Elliott waves, guys, this is how it works. Yeah, the first Elliott wave on a downtrend is down. Then you're going to see a correction, which is the second Elliott wave. You're going to have the third Elliott wave moving downwards, which is probably the longest one. Okay, again, you're going to see a bit of a correction. Okay, and then you're going to have the fifth Elliott wave. Yeah, this is how Elliott waves work. Okay, you have five waves, 3 in the same direction and 2 corrections, yeah, in this case. So I don't know what to say about Tesla. I think Elon Musk took a big chance when he went public. Even though he made 1 billion, another billion, I'm sure he needed it. But anyway, $266.60 for Facebook after a positive opening. However, the price is currently testing the 200 moving average to the upside. Okay, let's see if it's going to bounce from it or not. Looking at the RSI and stochastic, guys, they're both pointing upwards. So we might see Facebook doing a bit better. Right, Alibaba Holdings, again, dead cross formed above the price action today, $249.37 for Alibaba Group. Dead cross formed, let's see, RSI stochastic, very, very low into the oversold levels. Okay, there is potential, great potential to the downside, guys. I'm not going to be surprised if you're going to see Alibaba reaching 228, somewhere there. And now everyone's favorite, guys, now that we have quite a crowd watching us, good afternoon, everyone. Let me know what you're doing. Let me know how you're feeling and if you have any questions. Bitcoin, guys, just got rejected by that 200 moving average and is currently trading at $50,936. What do we see here? We see that in the last 2-3 days, Bitcoin lost power, guys. There's not enough buying volume on the markets. Okay, we see RSI not being able to go all the way up there. Okay, we see stochastic turning around. Not that technical analysis helps much when you're dealing with the riskiest asset class ever, but it does give you a bit of a hint, on the direction of the market. So Bitcoin, $50,910 with the most probable direction, at least for now, for a short period of time, downwards. Ethereum, guys, is following Bitcoin. Ethereum is encountering some resistance at that 200 moving average. 1,744 is the key level for Ethereum. It's currently trading at 1,634. Okay, just like the Bitcoin, the RSI stochastic don't have the power to go all the way up into the overbought levels, and they imply a bit of a weakness in the trend. Now, quick look at some trading signals, guys. The markets should start settling by now. Let me sniper these pop-ups. There we go. Yes, so European currencies, Euro USD, GBP USD, all green. 4 strong buy indications from investing.com. USD JPY undecided with a strong sell on a 5-minute chart, but the daily remains a strong buy. USD CHF, strong sell on all 3 time frames. The daily remains a buy, though, but that might change. Okay, it depends very much how we're going to get the announcements. Okay, there's still more announcements to come. The Aussie dollar, a shy strong buy, guys, and the daily remains a strong buy as well, but nothing in between to give us more hope. Euro GBP, strong sell on a 5-minute chart, strong sell on the daily. It makes a bit of sense. USD CAD, the neutral short time frames. No, 4 strong sell for the USD CAD on all 4 time frames, guys. There we go. I told you a minute ago. Ever since I know the USD CAD pair, it's in a downtrend. The Kiwi dollar, strong buy versus the US dollar. Euro JPY, the euro is strengthening with strong buy indications. And the pound is also strengthening versus the JPY with 4 strong buy indications. Right, ladies, gentlemen, traders, do you want to see commodities? Before I forget, give me just a second. Let's go back to commodities and the trading signals on commodities for our commodities traders. Right, gold, strong sell on all 4 time frames. It's curious. Oh, not the hair clinics advert again. Oh my God, no. Right, so gold, silver, guys. Strong sell on gold, silver very undecided with the daily remaining a strong buy. And copper, guys, strong sell on 3 time frames. Crude oil and Brent oil, again, strong sell. Now, this was it from my side today, guys. Join me again tomorrow, same time, same place, for a new round of market talks. And how can you start the weekend if I don't wish you a lovely, lovely weekend? I'll see you again tomorrow, same time, same place, guys. Until then, remember to trade responsibly and may all your trades be in the money.